Today is edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast. I'm joining with Curt Kimmel from agmarkets.net. We were talking about the weather situation in central Illinois. However, there are some concerns about the trade barriers for right now. We were talking about it with Kurt, and I had Mike North from Everag. This has been the Markets Club podcast. I'm joining with Kurt Kimmel from agmarkets.net. We were talking about the weather situation in central Illinois. However, there are some concerns about the trade barriers for right now. We were talking about it with Kurt. Kurt, how are you in the Twin Cities and Bloomington and Normal?
We're doing good. We received some rain here over this last weekend, and crops looking fairly good locally through here. We've been a little dry, but the rain just came in time for the most part. But unfortunately, you get in the southern third of Illinois down that Effingham, Vandalia area, they received a little over 7 inches of rain. So they continue to battle the moisture situation. It's been an ongoing battle since day one. So hopefully they can dry out a little bit and get the crop a little bit better. But crop conditions report as a nation remains strong, and there's some areas struggling. We've not seen the conditions report here yet as of Monday afternoon, but they're expecting the bean conditions to be the same, if not improve 1%. And I'm not quite for sure about that because with all this moisture we're seeing, some of these beans are starting to struggle a little bit. And as you know, the old saying is beans don't like wet feet and through here. So it's a matter of now watching the forecast and seeing how the end of the growing season unfolds as we kind of wrap up the progress as the progress here and see how the beans unfold here as we move into August.
I'm under the weather because of the cough, but great to hear that about the crop.
Yeah, this crop continues to hopefully be good because the price has not been very good at all. We one kind of offsets the other. If you're in an area where you have less bushels to work with, it's going to be a little bit of a struggle here. But as long as we see bushels at the higher end, we can absorb some of this lower price. Not only the weather, but the other thing is what we kind of watch, and we won't know here until we get in August, is these tariffs. This tariff situation is hit and miss. It varies from day to day. So as we move into August and see how the crop matures and so forth, we're also going to be faced with some of this tariff news and see what country comes to the table here and what country resists.
I see that there is currently being down for the grains.
Yeah, the grain market's been kind of in a downtrend in through here. Last Friday, we went home on a positive note, was able to rebound that chart gaps we left right after the 4th of July weekend. And thought maybe we could get some follow through here. Last week, we had some weekly reversals up, looked fairly good, but we ran into kind of a brick wall. Uh, the market is in a position to maybe pull back a little bit, retrace. We'll watch these moving averages, but the lows we saw here Monday is about 50% back down to the lows we made here last week. So it's going to be kind of important to kind of hold this pattern here to keep the market in position challenge the upside again. But yeah, it's been a seesaw affair. When you look at the big picture, I mentioned August. We are in a time window here when we move into late August, early September. We usually have most of the negative news priced in. So there's still some downside risk here over the next 30 to 45 days.
Okay, I heard about the fundamentals with the grains markets, especially with these tariffs issue until August 1st. What is your position on the fundamentals?
Yeah, that's the big unknown. And when we look at the supply demand balance sheet, we're looking at the supply, and that's being debated every day according to the yield. But you hit the nail on the head here. A little longer term is the demand side of the equation here, and that's still out for the jury yet. And demand's been fairly good. We've moved a lot of old crop, a lot of old crops being priced. However, new crop fundamentals is the export outlook and see if we have the export business we've had in the past. The biggest country, of course, we're watching is China. China typically books new crop beans ahead of harvest so they can get them purchased and get them shipped during the winter, but they've been awful slow to do that. Some of the analysts feel that whenever we have a more solid of a meeting take place, that we can maybe see a sell take place ahead of that meeting as a goodwill adjuster, because they're going to need some of our beans, but they're going to buy just what they need as they go through their marketing window this winter, because they continue want to buy their beans from the southern hemisphere. But the biggest fundamental news is basically we've got a big crop, but the demand side is still uncertain.
How about the technical aspects, Kurt? How concerned about demand for next couple months right after the fall harvest?
Yeah, seasonally we get a fall low in place. The big question is we're going to find a home for everything, and there could be some storage issues as we move into this fall. I think the best basis opportunity is probably going to be up front in the early part of harvest. But once we get in the mid to late part of harvest here, that basis could widen out. What the basis is, you take your futures price minus your cash price. And we're thinking that the cash could be fairly weak going into this fall. But once harvest wraps up, we do find a home for everything. Then we kind of can be in a position here to maybe have some recovery as we go into year end. But most of the buyers are looking out their back door, driving down the road. Crop looks pretty good. There's real no urgency to buy right now when there's a big crop coming at us. Now there's some short-term pent-up demand. I know of a ethanol plant that's not quite covered until harvest, and so they're having to bid up to kind of shake some corn loose here as we move into this fall.
Of course, I recommend the beef. It's pretty good than at Kroger and Walmart.
Yeah, those stores are pretty good. You got to kind of watch what you buy. There's nothing better than a good old piece of meat off the farm from the local locker plant. But yeah, everyone's got their comfort zone. The regular consumer, will probably buy something that's economically good for them, but they might suffer on a little bit of a quality issue. So, but yeah, there's nothing wrong with a good old steak from any of those stores.
Do you have any final thoughts about the corn markets for right now?
Well, the key is, kind of touched on the whether scout your fields. Talk of aphid showing up, so there's a lot of moving parts out there. Don't ignore that. But two, the team kind of feels the basis could be a little weak in this fall. So if you do have some crop that's not going to find a home that needs to be moved this fall, have a plan ahead of time and stay ahead of the game.
Do you recommend for the premium risk on the grains?
Yeah, there's a lot of different strategies out there on risk and premiums. The key is to look at your own unique situation. If you got some on-farm storage, there's a little bit of carry. There will be some carry in the deferred contract. So there's some opportunities out there. It's just a matter of sitting down and kind of penciling out a marketing plan to kind of follow here as we move into this fall.
Of course. Thanks, Kurt. I bet you're ready for this football games for the University of Illinois.
Yeah, I can't believe it's almost football season already. My wife went to Illinois, so we tried to make it there for a game or two. It's college sports is kind of exciting, so it'll be interesting to see how this fall goes.
Me too, as well. What's this summer is fast.
Yes, over the years seems to keep going faster and faster.
This is Kurt Kimmel from agmarkets.net on back roads. We are going to be almost on August. The corn crop is up at the production stage in the Midwest. I will be having a conversation about this growing season in Upper Midwest. I am joining with Mike North from Everag. Mike, how are you?
I'm doing well, Caesar. Good to join you.
Mm-hmm. Great to have you as well. All right, Mike, let's discuss about the growing season in Upper Midwest. How is the corn and beans in Wisconsin?
The crop looks absolutely amazing, and anybody that's been out on the road and had a chance to just see it from the highway has watched as this crop has continued to grow quickly and maintains a beautiful, rich, dark green color. And as we are coming into pollination with rain in the forecast and moderate temperatures, everyone is brimming with excitement about what kind of yield potential this crop has here in Wisconsin. And that's shared by many of our clients across the country as they look out their own back door.
How is the weather forecast for next few days? Tomorrow is going to be pretty hot.
Yeah, we're definitely going to see some heat. If you look at the NOAA forecast, 6 to 10 day outlook has, relatively normal, and as you go further south in the United States, slightly above normal temperatures relative to this time of the year. With the Western Corn Belt also seeing above normal precipitation, even as the rest of the Corn Belt is expected to have more normal precipitation. If I talk specifically about our particular region in southwest Wisconsin, we are due for some rain over the next couple of days, and temperatures that, again, are relatively moderate. A perfect setup, really, for a corn crop that's approaching pollination.
So you're watching about the technical side in the weather premium for right now.
Well, and if you've been looking at the trend in our market, I think because of the forecast, that softer tone that we've observed in price is really more of a lack of premium being added to the market because of the, very friendly conditions for maintaining this really great yield potential that keeps getting talked about in the marketplace. And so with Monday and Tuesday's finishes both being lower, coming off of a stronger week last week for both corn and soybeans. I think what you're really seeing is more of an evaporation of some of that weather premium that might have existed, and just an acknowledgement that the crops are in really great shape.
I am curious, could the yield trends in the neutral or the fall harvest season with the yield is lower on the balance sheet? What is your thoughts on the balance sheet with the yield?
Well, if you look at corn yield specifically, which is going to be the first real conversation that we're going to have, given that pollination is upon us. The current expectation of a yield at 181 keeps us right at the trend line. And, as you look at Monday's crop progress, crop condition scores, we stand out and give good reason for the USDA to potentially take it above the trend line. And if you go back in history, we've seen years where that has certainly been done. Last year is a perfect example. Last year in the August report, the USDA raised the yield to 183 after, scoring numbers that were 6 to 7 points below where we currently stand on crop condition scores. And if you saw the numbers on that crop condition report Monday afternoon, corn came in 74% good and excellent. And, as you compare that to the 5-year average, that's fully 10% above what's considered normal. Soybeans really in that same camp, 68% good and excellent, and that has us 7 percentage points ahead of the 5-year average. So as we talk about the setup, there's a lot of growing expectation that we should see some sort of acknowledgement of those scores by way of a higher yield. So don't be shocked if it shows up in a few weeks when that report comes out. But obviously, we have to make it that far. Right now, this ongoing, persistent, good and excellent rating does make a case for it, though. And, I think the big question is how high could they raise it? And you're already hearing a lot of chatter around the country by different analysts who think that a number that's north of 185 is completely plausible and certainly reachable given the current situation. Now, I think we can all acknowledge that some of the storms that have come through and brought very timely rain and, made some of these conditions what they are have also done a little bit of damage. So some of the, chatter of a potential 190 yield might be a little bit of a stretch, but know that inside of different market conversations, numbers like that are being thrown out there.
What is the yields on the world supply and demand for this month, Mike?
So as we look at current world supply and demand numbers, again, just kind of sticking with corn in this particular conversation, we are looking at about 272 million metric tons of corn. And in the July report, which came out a week ago, that had us off about 3.16 million metric tons from where the projection was in June. And you saw that as we saw a little bit of cuts to the U.S. crop, as we saw cuts to the crop in other parts of the globe. And so as you bring all of that together, we have this slightly smaller balance sheet, and that's a trend that's honestly been in play for the last several years. We held a stocks-to-use ratio that was about 26% for a good many years. That has kind of fallen off over the last couple, and now sits in a territory of around 21%. So a tighter balance sheet globally as a byproduct of some smaller production, but also as a byproduct of increased demand. And so that certainly has put a few people at the edge of their seats, keeping them hopeful that this market can, at some point, despite even some of these talks of big yields and bigger crops, potentially find a bottom and push prices back higher.
How about the beans yields?
Soybean yields still have a ways to go before we're really going to dial into them. But as I was mentioning with regard to crop progress scores, that crop is also out ahead of what would be normal for this time of the year. And so as we get into the month of August and see a little bit more August weather, as we go through that flowering and pod setting period of its development, we'll have a little bit better sense as to, kind of what to expect from the USDA in terms of yield expectations. But I think as you look currently at where things sit, I don't think you're going to find too many people that will disagree too much with the 52.5 that's on the balance sheet. We're just going to have to wait to see if there's any need for or justification.
Yeah.
So as you look at the current feeder cattle complex, certainly there too, lots of good support in that market. Fats have continued to lead feeders to all-time record levels of their own. And, as we look at nearby prices that are approaching $3.30, we're quite excited about where they could go. However, as we study charts and look at some of the normal behaviors behind the market, we've been climbing higher quite consistently day by day since about the third week of June. And if you've been studying the cycles of price, you'll note that after about a month or a month and a half, it's normal for the market to set back following some of these gains. So if we were to set back, ultimately, some of those floor prices or support prices that you're asking about would probably come in that area around 310. And so as we, take a look at 310 and, kind of put an eye out to the forward curve, bottom line is that you'll notice the winter prices are hovering just above those points. So January feeders trading 317, March at 313, kind of holding themselves together just above some of those, what I'll call support levels. And so if some of these nearby markets were to fall back, we would expect to find support in that area.
A1, sauce on the side. Do you have any final thoughts about the fundamentals on the grains markets with the lower prices?
Well, I'd say as you look at all that's happening from both a weather perspective as it relates to and influences the discussions around corn yields and price, as you look at what's going on in South America as they harvest a record crop, as you look at the trade situation and the potential ongoing threat of tariff and some of the discussion to that end, I think it's important to recognize that while the markets may not be as low as they have been, I think we need to appreciate that prices still have risk of moving lower. And so while the market isn't a one-directional environment, if we see an uptick in prices, I think it's important for producers to recognize the opportunity that comes in that and to be quick to defend those opportunities against some of these risks that we call out.
Thanks, Mike. I am ready for this football season, but the Bears is getting ready for the Packers, but I like to watch Wisconsin football.
There we go. That's a great choice.
This is Mike North from Everett, Back Roads of Illinois.